Hello everyone, welcome to our channel. Today we are going to learn about journalizing. That is a step in the accounting cycle. Before going to learn about journalizing, once we go through the accounting cycle, that is in the previous class we learned about the accounting cycle. So the accounting cycle of the first step in the is the business transaction. The business transaction is recording the events which happen in the business, and that we will make a recording. That recording should be in the form of journalizing. That means writing the journal entries. This is known as writing the journal entries. Okay, so this journal entries we should write in a dual aspect, that is the double entry system. Okay, so now we are moving into the our topic, that is journalizing. So firstly, in the accounting cycle we learned that first is a business transaction, that is that event which is happen in the business, that we will make a record. That recording should be happen in the way of journalizing, that is known as a recording of entries. Okay, entries means the transactions. Recording of the transactions in the form of journalizing, it is also known as a journal entries. Okay, now we are moving into the our topic, that is journalizing. Journalizing is a in double entry system of bookkeeping, both the aspects of the transaction, that is receiving aspect and the giving aspect, are recorded. That means a dual aspect. Two aspects we will write, that is receiving aspect and the giving aspect. And this journal entries we will write in daily. Okay, daily we make a record. Okay, it is a book of original entries in which all transactions are recorded in the form of entries. Simply, the process of recording transactions in a journal, it is known as a journalizing. Okay, so for writing the journal entries, we should learn the classification of accounts and rules of double entry system. Okay, so for writing the journal entries, we should have the knowledge. That means the accountant should have the knowledge about the classification of accounts. Means where the events which are happen in the business, that we should make a classification. Okay, we should divide it in separately as according to the accounts, and with it we will write the entries. We will write the entries with the help of the rules of double entry system. Okay, did you understand that? Journalizing means it is a writing of the double entry system of bookkeeping. Double entry means dual aspect, two aspects, receiving aspect and giving aspect. Okay, that is known as a journalizing main concept. Our next topic is the classification of accounts. Okay, for running any type of business, a trader requires person from whom he purchases and to whom he sells the goods. Okay, so the trader should know the from whom he purchases the goods and to whom he sells the goods, and also goods intended for resale and some other assets such as furniture, machinery, etc. Further, in the course of his business, he has to incur some expenditure also. such as rent, wages, salaries, insurance, stationery, etc. It is clearly says that the accounts maintained by him must be related to all these categories. That means the trader should make a note of what type of an expenses he did and what he purchases and what he sells. Okay, so the person that is the trader should have somewhat knowledge about the what is coming into the business, what he receives and what is giving to others, or what is going out of the business. Next, this classification of accounts, again it is classified, that is divided into two, that is personal account and impersonal account. Okay, the personal account, that is personal account are those accounts which relate to persons or firm with whom the trader deals. As example, we can say customers, suppliers, money lenders, banks and owners, that is proprietor. Business may have many credit transactions with these persons or firms. A separate account is to be prepared for each of them. Okay. Next, second one is the impersonal account. Impersonal account which do not relate to persons. Simply the personal account, it's relate to the persons. Impersonal account do not relate to persons. Again, this impersonal account are divided into three types, that is real account, nominal account and valuation account. Okay, so these are the very important to the business. In the real account are also called as property account or assets account. The totally in the real assets we will learn about the what is coming into the business or what is going out of the business. That is what type of assets we are purchasing, what type of assets we are selling to others, as such as land, building, furniture, plant, machinery, patents, cash, investment, investors, etc. These are the assets, maybe those in which the trader deals, or they may those with the help of which he conduct his business. He can run his business. Okay. So the next one is a nominal account. These are the accounts of income, gains, expenses and losses. For example, wages, salaries, discount paid, commission, rent received, purchases, sales, etc. These are the nominal accounts. Okay. Next one is a valuation account. In this account, we will write about the provision for depreciation, that we will make a depreciation for the fixed assets. Okay. So which depreciation value, what depreciation we did on which asset, that we will make a record, and we will make a calculation of the depreciation. And also the provision for doubtful debts are prepared in this valuation of account. When accounts of fixed assets are maintained in the books of accounts at original cost that reflect the actual book value of the asset. Okay. A provision for depreciation account is maintained. In the balance sheet, the provision for depreciation is deducted from the original cost of the asset on the asset side of the balance sheet. In the same way, the debtor's personal account are maintained with total amount due. As a valuation account, namely provision for doubtful debts, is required to be maintained. In the balance sheet, it is shown as deduction from the sundry debtors on the asset side of the balance sheet to reflect the estimated realizable value. Okay, so in the valuation of account, we make a record of which type of accounts, that is depreciation. We will make a calculation for the asset and provision for doubtful debts on the debtors. Okay, after calculating of this, we will make a actual amount to the balance sheet, and in the balance sheet asset side we will write in a clear cut manner of what depreciation we maintained and doubtful debts on the debtors. Okay, so these are the classification of accounts. The classification of accounts is divided into two. Okay, that is personal account and impersonal account. Okay, the personal account are the persons who related to the firm or business, and impersonal account are divided into three, that is real account. It will give the information of the all properties and assets, and in the nominal account, total expenses, incomes and gains and losses. And coming to the valuation, we will write about the depreciation and provision for doubtful debts. Before going to write the journal entries, the accountant should have a knowledge of the classification of accounts. Okay, thank you.